It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday evening, June 20th, 2016. Markets are rebalancing after last week's quadruple witching, and we're seeing some great opportunities for Tuesday's trading session. Crude oil, S&P, and the gold are bullish, while the euro is bearish ahead of the Brexit vote later on this week. Big happy Father's Day out there once again to all the dads. Hope you guys had a great Father's Day. Got a great newsletter in store for you guys and gals tonight. Lots of important opportunities going into Tuesday's session. Before we jump into charts, though, and look at the plan for tomorrow, I want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video. Follow that link. Come over here to join me on the blog at Sideways Markets and watch the full-length version on the trading blog. While you're here, don't forget to grab your free pass. If you're not a member here at School of Trade, if you're not an advanced member, if you want a free pass, upper left-hand corner, come out and join me as a guest for a few days this week in our trade room. Lower left-hand corner, don't forget to register as a member of our mailing list. I'll send you an email every evening when the nightly newsletter goes live. Promise no spam there, just the good stuff for the nightly newsletter. All I need is your name, your email address, and then check your inbox because I'm going to send you a verification email. Right below the video tonight, you'll see a spot to download all the charts from tonight's video. How easy is that? You can have all those charts on your computer and ready to go for tomorrow. And then don't forget, you can learn the who, what, where, when, and why. SOT is the fastest growing, the longest running trading education website on the planet. Grab a free trial membership on the right-hand side and learn the who, what, where, when, and why, more about how we trade here and what it feels like to be a student here at School of Trade. And don't forget, we're hard workers here. We're always here to help you guys out. If you need any help along the way, use that live support button on the right-hand side if we can help out with any questions along the way. Got a big plan here. We got a lot of news to cover this week. Let's start off by talking about the calendar for tomorrow. We'll take a look at the Brexit vote on the 23rd, and we'll put together the plan for tomorrow's news, and we'll jump into some charts. Tomorrow is, of course, June the 21st, Tuesday edition we're getting ready for here right now. First of all, let's look and see what we have coming from our friends here in Europe tonight. Nope, nothing out of Europe tonight. We have the Bank of Japan meeting minutes tonight at 7 p.m. Eastern Time. We get the RBA meeting minutes at 9:30 p.m. If you're trading the if you're trading the Asian session, Australian session, be aware of those two major news events coming out 7:50 and 9:30 tomorrow. Then we go into Europe tomorrow morning. Not a lot on the schedule out of Europe. The big news tomorrow morning, though, will be that ZEW survey out of Germany. Right, very similar to consumer confidence here for consumers here in the U.S., right, that it's going to be a business survey, the ZEW survey tomorrow morning at 5 a.m. And then, of course, we've got Yellen speaking tomorrow at 10 a.m. in the U.S. session. So starting off tonight, we got news out of the Bank of Japan and the Royal Bank of Australia. Get some important meeting minutes coming out of the Asian session overnight. We're not going to worry too much about the 2 o'clock merchandise trade, but we definitely know the ZEW will be on people's watch list tomorrow morning at 5 a.m. Not too worried about the industrial trends survey, but we definitely have to be aware that tomorrow we're going to get yellified tomorrow morning. What that typically means is you know that people are going to be listening to what she says tomorrow, so trade around that news and get to it early. Basically, tomorrow is going to be a get to it early or get to it late. We know there's going to be a little bit of sitting on hands ahead of that event tomorrow morning at 10 a.m. So I would assume a little bit of action after the 9:30 opening bell here in the U.S. Then it will probably slow down 9:45, 9:50, get real slow as she starts speaking at 10 o'clock. And then don't forget, depending on when she's done, 10:30, 10:45, and then you'll get that last push at the end of the morning session. So tomorrow, get to it early, either in the London session or early U.S., or get to it late in the U.S. morning session tomorrow. Janet Yellen starts a two-day event tomorrow. So typically it would be pretty good up until she starts, until she takes the microphone, and then we'll have to wait and see when she finishes. Depending on when she finishes up the speech tomorrow, we then, of course, will then be able to trade afterwards, and then she'll do it again on Wednesday morning at 10 a.m. Now, get the plan for tomorrow. Get in early or get to it late in the morning. Obviously, I always recommend we get to it early. Just a heads up, I'm getting emails now from brokers regarding gold, regarding euro, regarding the British pound. We do have the highly anticipated Brexit referendum vote on the 23rd. If you've been living under a rock the past few weeks, we've been talking about this. This has really been one of those variables. Combine that with a possible rate hike here in the U.S. that definitely has been throwing a little bit of sawdust into the mix. So it'll be good to get this out of the way later on this week. But a heads up though, if you're trading gold, trading euro, or trading pound, make sure you contact your broker. You should have already received emails from most brokers. We're sending out emails today and over the weekend about adjusted margins. They're anticipating some higher than expected volatility during this time leading up and, of course, after this big vote. Personally, I think this is all going to blow over. I think a lot of these I'll be very surprised if they do leave the euro, just to be very candid with you. This is not the first time this discussion's been up for a vote. This is not the first time this has come through the system. So I'll be, obviously like everybody else, be waiting to see what they say, but I'm not expecting to get much out of this on Thursday. Like a lot of things, I'm expecting to see a lot of lead up and a lot of talk on the news media, and I'm sure there'll be a little bit of, back and forth afterwards, but we'll have to wait and see how this thing plays out on Thursday. I'm not going to worry about it too much right now. S&P and crude oil will be the most consistent markets this week. They will be less affected, right, by that Brexit referendum vote on the 23rd. And again, make sure you contact your broker if you're trading gold, euro, or the pound right now, right? So we want to make sure you're aware of those revised margins that should only be temporary, right? But you do want to be aware of that. They're being proactive out of it. And again, if you want my opinion, I don't think there's much. I don't think it's going to happen, right? We've seen a lot of this over the past, at least in my career. I've seen this come and go many times. We'll see what happens, right? We'll see what happens. But if you want my guess, I would guess by this time next week, this is all blown over, and we're back to we're back to business as usual. That's usually how it goes, isn't it? A lot of commotion about pending news, and it usually finds a way of working itself out, right? It's one of the big reasons why I say listen to the chart, right? Don't listen to the talking heads on television. They're doing nothing more than trying to scare you into consuming more of their programming so they can sell more advertising. Now, back to the plan here. We got the news for tomorrow, right? Remember, Yellen tomorrow morning at 10 o'clock. Get to it early or get to it late tomorrow. We'll be trading around Yellen with all of our students in our trade room tomorrow morning at 8 o'clock Eastern time. How about some crude? We'll go crude, S&P, gold, and euro. Crude is bullish and trading inside a wedge this evening, which tells the buyers to look for opportunities below prior support levels on the way up to the target at 50.08 tomorrow. It's pretty easy to see this is a bullish market. Coming out of last Friday's quadruple witching, this thing was on a hunt to get back to that $50 a barrel. Very, very bullish here right now. We got a couple really important clues on the chart right now. Let's go through them. The most important one here is going to be this wedge. The wedge is obvious, right? It's pretty obvious. Now, there are ultimately three main things you want to remember about a wedge. First of all, trade in the direction of the wedge. Okay, I think it almost should go unspoken, but hey, people try trading against a trend all the time. So the first rule is the direction of the wedge, right? Keep focused on, this case, bullish. Keep looking for the buying opportunity. Second, the buying opportunities that we're looking for are going to come back at prior areas of support. This is where the most reliable areas are going to come when it comes to just a wedge. We're going to tie this all together in a moment, but when it comes to a bull wedge, we're looking at any of these areas, any of these swing lows, any of these areas are where buyers are going to be looking for opportunities to buy this market. Very similar to a spike in channel, which you hear me talking about quite a bit, right, on this nightly newsletter. We're going to see an example of that right now, actually, here on the crude, and we have one on the gold tonight. So we'll talk more about the spike in channels in just a moment. Excuse me. Pardon me on that one. I don't do that very often. Sorry about that. Again, follow the direction of the wedge. Second thing, look for those traps, right? Look for those traps below prior areas of support. Sorry for coughing in your ear back there. I like to think I don't do that very often to you guys, so I apologize about that. What's the third piece? There was three pieces of this puzzle. Absolutely the wedge target. right? That's going to be your target. Now, anytime we have, in this case, it's a bullish objective, we're expecting to see price get up to the wedge target. Once we get there, we then expect to see one of two scenarios. Either we blow right through it, hold above it, and we go to the next milestone, which in this case is going to be the measured move at 50.20. Or what is more typical, we saw a great example of that today on crude oil, right? There was a wedge that we found today, right? Two-legged correction back to an area of support and then a double top up. So that's going to be the next scenario, right? So again, rule 1, follow direction of the wedge. Rule 2, look for traps below prior swings. To go back up to number 3 is going to be the wedge target. Once we get to the wedge target, what do we do from there? We wait. Wait for what? One of two scenarios. Either it blows through it, right? Like it's not even there. If it blows right through it, it's going to be hunting for the next milestone. In this case, it's not going to be that much further. It'll be that 50-20 area. Either way, if it blows through it, we know where we're going next. We're going to that measured move. What is more likely, though, is once we get to that wedge target, we get the typical profit taking from the buyers, counter trend sellers into the market. We look for a two-legged correction back to an area of support, and then a double top. Up we go. Buyers aren't going to want to buy high. They're going to want to buy on a pullback, and that will typically come after a two-legged correction back to an area of support. The same thing will happen if it gets to the measured move. The measured move is the same thing. If we get to that measured move, buyers aren't going to want to buy high. Unless this is one of those rare runaway markets where you can just buy everything and it keeps going up, right? That might happen, but it's pretty rare. Watch out for that tomorrow. But typically what happens, though, is when we get to a wedge target, when we get to a measured move, when we get to, the term I use is when we get to the objective. The market is always trying to get somewhere. It's trying to get to the measured move. It's trying to get to the wedge target. It's trying to get to the high of the channel. It's trying to get to the low of the day. Whatever the objective is, when it gets there, mission accomplished. Buyers take their profit. In this bullish example, buyers are not going to want to buy high. Sellers are going to want to sell high. They're going to try to sell into it. And we're going to look for a two-legged correction. Two-legged correction back to where? Back to a prior area of support. Before what? Before buyers get interested again and try to send this price right back where it came from. The whole idea is buyers won't want to try to buy high. Next piece of this puzzle is the bull channel. This bull channel is interesting because it's definitely going to be used for kind of a runaway. You'll notice the channel looks pretty good if you look at it kind of the first half of the channel, but then you'll notice we start missing rotation, right? We start missing rotation. All of a sudden, rotation doesn't work anymore, and that's what creates the wedge. With that said, if this thing just happens to go berserk tomorrow, right, you can use this as your runaway target. I don't expect it, but hey, you know, we've seen crazier shenanigans out of crude oil in the past few months. This may be a situation we may need tomorrow. All right, so again, wedge target to be the short-term target. If it blows through it, the measured move. Wherever we get up here, then two-legged correction back down, and then back up we go. If it blows right through it, then you know where the next objective is, and that's going to be up at the high of that big, long bull channel. Again, it doesn't look like the case right now, but you want to be ready, right? Better to be prepared than not prepared tomorrow. What else do we have here? Possible bull spike in channel. Now, bull spike in channels, very similar to a bull wedge. We're going to have one of these on gold as well tonight. There are a couple rules of spike in channels. First rule, follow the direction of the spike. Right? Trade in the direction of the spike. Very similar to a wedge, as we said earlier. Do not try to fade a spike in channel. What else do we know? Just like a wedge. Just like a wedge. Look for traps. Right? Look for traps. The big old trap coming down at the correction zone. The correction zone is going to be the lowest point of that pullback with the beginning of that channel. There's your correction zone. So step number 1, follow the direction of the spike. Step number 2, look for traps below prior swings, right? Buyers don't want to buy high. They want to buy low, right? That's where they want to buy. They're going to want to buy at those dips below prior swings. What's the third piece of information? The target. The target is back at the high of day. Little bit different than a wedge, right? A wedge target is going to be at the vertex where those two trend lines collide. It's usually going to be above the